Are we going to see the 10-year bond and the 30-year continue to go up in yield and down in price over the next week, 2 weeks, year or so? Well, stick around. I'll talk about that and the economy, how it's going to impact housing and the stock market and everything else that you keep an eye on. Before I forget and get into anything else, do me a favor, hit that subscribe button, smash that like button, chime in and make comments. I'd really appreciate the help. The way that the YouTube algorithm works, it helps other people find the video when you do that. If I remember, I might even post a link for opening an account with SoFi. Um, I think it gives you an extra $25 if you open an account. I'm not 100% sure. So if you click on it, do me a favor, just make sure before you do. But it's an account I opened for my son. It gives him 25 bucks. So it's kind of nice and it'd be cool. He'd be super excited if he saw that. He's only 12 years old. And I try to encourage him to do a lot of the things that I'm talking about in the videos. Anyway, good morning. My name is Adam Kahn and I'm the Rational Investor. Today is Wednesday, October 4th. I've been having all trouble with the date. I never seem to remember. Posted it wrong yesterday, so hopefully you all forgive me. Um, Enjoying my day, talking to you guys from sunny Las Vegas. We're going to talk about the bonds. I mean, yesterday was a huge day, and I think we're seeing a little bit of a pullback today, seeing yields go higher, which means prices go lower on mainly the 10-year and the 30-year. And I think we'll probably see follow through where we might see the yield curve uninvert, but I think the way it's going to happen is not how it usually does. I don't think the Fed's going to have to quickly cut rates because we run into a terrible economy. I think you're going to see the 10-year and the 30-year naturally uninvert. I was watching an interview with Bill Ackman on CNBC, and I hate to agree with him because I am not a fan of Bill Ackman's, if I'm perfectly honest. Um, but he sees a lot of it the same way I do. If I'm going to lend money to the US government for the next 10 years or 30 years, in the economy that we're in right now, I want better return than even high 4%. I don't want to tie up my money for that long unless I'm getting 6, 7, or 8% return. We're in a little bit of an uncertain time. There's more risk to it than they seem to think there is, or the markets do. So if I'm going to put out money to them, I want to get better return. Now, how's that going to impact housing and stocks and things like that? I don't think as bad as people might think. These are all investment things, but let's talk about housing first. I do picture mortgage rates continuing to go higher, but I think the housing market we probably see stagnate. The reality is, because I'm stuck in this position, when they talk about owners who are stuck because their rates are low, I can't really move anywhere. I'm not going. So you're not going to see that inventory come to the market. I get it. Now, I am not a realtor. For all you guys yelling in the comments that, of course, he must be a realtor because he's saying houses are going higher. I'm not necessarily saying they're going higher. I'm saying if you are in a good position financially and you're thinking of buying a home, I wouldn't start freaking out about what's going on in the economy and the Fed with rates and anything else. Buying your primary residence and having a place to live in isn't something you should really think of as a financial decision like that. You should think of it as a financial decision in terms of the security of owning your home, and do I have enough for down payment, and can I comfortably afford the payments, and do I have reserves in case there's a rough patch for 3, 6 months, even a year. I wouldn't just look at it like, oh, I'm buying it to make money, and I sure wouldn't stretch my budget. The market goes up, if the market goes down, I then wouldn't worry about it. For me, it's security for my family. It's I want to paint the walls pink. I don't have to ask a landlord. It's I don't have to worry that the landlord took on more than they could chew and made a bad investment, and I have to make alterations in my life because they may or may not lose the home. It's a lot more going into it than a simple, am I bullish the housing market or bearish the housing market? I think legitimately here in Las Vegas, we could have a 10 or 20% house price correction in some areas. I don't think that's everywhere, and I don't think that's every home. I think there's still deals to be had. But I have a rental property that I'm preparing that might be a 20% correction in price, but I'm not super concerned about that either. We got in at the right time. The rate we have on it is really low because we got in at the right time. And we'll at least break even or make a little bit on it. So again, more inventory that you're not going to see come to the market. And I don't think I'm the only one in that position. Now I'll talk about the stock market. Same thing. If you buy good good quality companies, they should be able to make adjustments and factor for what's going on in the world all the time. If you own companies like Target that's going through a rough time right now, and that's why I use them as a good example. The stock's fallen a good bit. Relax, they're a good company. And inflation should help companies like that in reality because they should be able to raise their prices along with inflation. As long as their costs for employment and things like that don't go up at a higher rate than the rates that they're able to increase the prices of their goods, their earnings should continue to grow and they should do very well through inflationary times. Like, I wouldn't overthink all the things that are going on in the economy. I would just live your life and continue to invest and put away and save for the future. Now, please remember, I am not a financial advisor. I'm just some idiot on YouTube sharing my opinion. You guys need to do your own research and make your own decisions financially and not listen to me. Use this information that I share for entertainment purposes and know that I'm just sharing the information I've learned over the years. I'm wrong a lot. I don't mean that sarcastically. I learned as a trader on the floor of the exchange. I make a lot of mistakes. I just try to keep those minimal and try to let my winners ride. But you guys need to do your own research and make your own decisions for what you want to do financially. But what I really believe is if you pick good companies in the stock market, the noise of what's going on in the world is just noise. And the good companies will continue to perform no matter what the environment is that the world is in. They'll adjust accordingly and they'll make the right decisions financially to continue to grow and prosper. So, all of the fear mongering out there and all the things going on to scare you into only buying gold or whatever it is that it's like the world is coming to an end. I think you're doing yourself a bit of a disservice by not being invested in other things as well. If inflation continues, well, inflation goes through investments and things should go up accordingly. If even at the 3-4%, I would hope with the companies that I choose, I hope to do a little bit better than that. So trust yourselves. Stick with good long-term companies. I mean, some of the ones I really like Pfizer down here because I think they're undervalued. I really like Target, which I already mentioned. I always love the Meta and Google and Amazon and Tesla. Like, I think these are great companies. And I'd like to think that they'll figure ways to continue to prosper as time goes on. And I don't put in too much where I worry about any one of them. Like, if they go down, they go down. I go about my day. I work my job. I make sure to keep up with my bills. And I hope in 10 years I wake up and my investments have done real well. Be careful with the treasuries if you're looking out at 10 years and 30 years, because I really think that that's not the greatest return for that long a time frame. I'm not looking to lend my money to the government for the next 10 years under 5%. I'd rather do 3-month rolling CDs and get 5% and change and see what happens in another year or so. Again, like I said, I mean, I hate agreeing with Bill Ackman, but I think that's why he shorted the long end of the yield curve. I see the same thing happening. The interesting thing is I could see mortgage rates going up too, which is why I get the disconnect and why a lot of people think there's going to be some housing crash. But the housing crash really comes if there's unemployment. I don't think the Airbnbs and the things like that that people are pointing to is what'll cause some big housing crash. I just think the Fed's done what it wanted to, and it's slowed down the growth. I think the rents are coming down, and I think legitimately they are, and I think people will be able to get better prices on rents. Still don't think that means you should necessarily rent if you want to own something for you and your family. Got to make that decision for what fits you guys best. Anyway, enjoy the rest of the day. I'm sure I'll talk with you tomorrow, and have a good one. Oh, don't forget, like, subscribe, thumbs up, chime in, tell me why I'm an idiot. I know housing market's going to crash and I don't know anything. I get it. But make the comment. I got no issue, and I'll respond and we can chat about it. Have a great day.